Hello everyone and welcome to another Seraphim LinkedIn live session. Today we'll be discussing the Seraphim SpaceTech Ecosystem map. The ecosystem map looks to capture companies across the space tech value chain, upstream, downstream and the in-space economy. We know that our community have found it really interesting, so we thought we'd take a deeper dive today. I'd like to introduce Seraphim investors Trisha and Lucas. If you've been following our webinars so far, you'll have met them both before. Hi Trisha.
Hi Leah, hi everyone.
Hi Lucas, thanks for joining me today.
Hello.
So let's get straight to the questions. And before we start, I'll just say that we're happy to take, as normal, questions from the audience. If you want to post them in the chat, we'll try and maybe take a few throughout as we go along, but we'll also take loads at the end. So please keep them coming. So first of all, Lucas, firstly, can you explain to everyone a little bit about the Space Tech map and what it represents?
Sure. So our 2023 Space Tech Ecosystem map lays out what we view as the most progressed VC-financed new space startups. And we separate it out across the value chain, so upstream, downstream, and in-space economy. I can spell out in a little bit more detail what each of the subsegments mean. So within the upstream, you have companies that are building or operating space hardware or any hardware that ultimately ends up in space. So in the build segment, you have companies manufacturing satellites or providing subcomponents for satellites that obviously ultimately end up in space. Within the launch segment, you have rocket launch companies like Rocket Lab or space tugs and last mile delivery vehicles for satellites. And then you have the whole collect segment of the map, which is companies operating satellite constellations, which could be for Earth observation or communication. On the downstream side of things, you have companies that are transmitting and using space data. So downlink is companies that provide technologies for supporting the transmission of space data. This could be optical terminals, ground terminals, security solutions, etc. Analyze is companies using Earth observation data to create interesting analytics that could be used by corporates or governments to improve their strategy or for defense purposes. And then ultimately, lastly, you have the product companies, which often includes companies that you wouldn't typically think of as space companies. But these provide a productized offering where satellite data is one of the key inputs. So examples of these could be parametric insurance companies that price risk using satellite data, supply chain platforms that utilize AIS and weather data to forecast when shipments are going to arrive and to provide traceability on your shipments, and then carbon credits that can use satellite data for verification. Then there's the last segment that we include, which is also the in-space economy. So this is a slightly more nascent segment, but is rapidly maturing. So this is startups servicing other companies that themselves are operating in space. So these are companies like providers of next-gen space stations, satellite refueling, life extension, and a bit further down the road, space resource utilization. The map is, of course, not perfect. It doesn't matter how you choose to segment a landscape like this. There are always going to be edge cases that are hard to fit. Some examples of this would be like geospatial synthetic AI training data. That's a little bit difficult to place how we've set up our map, and also financial products that are dedicated to space tech sort of don't have an obvious place. But we do our best to represent the landscape, and I think it does a relatively good job capturing the vast majority of companies that we see. When it comes to selecting companies, we only typically represent the companies in a given category that have raised the largest amount of funding. This is a bit of a moving target depending on which segment you're looking at. Segments like like Collect, which is full of constellations, are quite progressed. So typically the companies here have raised many millions of dollars of financing, whereas the software hard segment of the build segment is a little bit earlier stage, and I don't think any of these companies have raised much more than 10 million to date.
Brilliant. Thank you, Lucas. Thanks for explaining that to everyone. We've had a lot of interest as we've been sharing this map on socials, but some people commenting, why weren't they included in this, for example? Would you explain to people what the difference is between this and the previous map that we released?
Yeah, so the last map we produced was specifically for the in-space economy. And that was part of a full mapping exercise that we did which was all focused on that in-space economy segment that I mentioned earlier. We weren't really looking too much at funding levels raised, so we were quite inclusive, and as such had about 200 companies represented on the map. For this one, we've essentially boiled it down to the 50 companies that have raised the greatest level of funding. So this map's a little bit more selective and a little bit more focused around the level of VC financing that was raised.
Great, thank you, Lucas. And if anyone wants to have a look at the map while we're going through, you'll find it on our website under research, and also all over our socials and on our LinkedIn page. Trisha, I'll go to you. What was the primary goal when creating the SpaceTech Ecosystem map?
Sure. There are a few goals that we had when putting together the map, and when we put it together every year. The first one is, of course, for us to have an eye over what's going on in the entire new space industry. So this is public, private, new space startups that are doing something new, doing something novel in the space sector. And it helps us better understand how the sector is shaping up. I think everyone can agree it's a pretty new sector, new industry that's proliferated over the past sort of 5 to 7 years. So it helps us understand where companies are operating, which sectors are companies being founded in and also funded in, and therefore where should we as investors be looking at when we're looking for future investment opportunities. So it helps us understand, for example, what stages of businesses are being formed, geographically where are they being formed, and which of the kind of subsectors within the space industry they are targeting. And that helps us understand why they're targeting those sectors and therefore what the broader opportunities are. At the same time, we publish this map so that we can educate other people, other investors, for example, or even other founders, as to how we view the broader space sector. And it hopefully helps other investors get more comfortable with investing in the space sector, which obviously benefits us, but hopefully also benefits the startups that are operating in this area.
Brilliant, thank you. It's great to share the knowledge that you guys have with everyone. Can you tell us a little bit about the current state and trajectory of the space tech sector and what the map is showing there?
Sure. I think the best way to look at that is to compare over previous years where we've published the map and look at the way that the different segments are changing. I think one of the most obvious areas is in kind of satellite constellations. So in the last sort of 5 or 7 years, there was a huge explosion in the number of satellite constellations that were launched as launch became cheaper. And it became easier for startups to access space and operate constellations. There are a huge number of these that were launched, in the thousands of satellites. This segment is now maturing. We're seeing less activity here in terms of new startups being founded, but funding levels for that segment are remaining pretty robust as these constellations are maturing and they build out the number of satellites that they have in space. What we've seen then is a shift towards the number of companies being founded on the downstream. So these are companies that are relying on data or connectivity that comes from space. They maybe aren't what you would immediately think of as a space company, but they really rely on some of the capabilities that we have from space. And we've seen a huge number of companies being founded, especially in the segments that we classify as analyze and product. So these are companies dealing with data that comes from satellites, and making it useful to people on Earth. And I think the final area we've seen a shift, which Lucas alluded to earlier as well, is the in-space economy. So if you look at previous versions of our map from a few years ago, it was a very small segment. It was a very small sort of part of the map. And now that's growing. And we've obviously recognized that. And that's why we also published a completely separate dedicated map for that as well.
Thank you, Trisha. You just touched on what I was going to ask Lucas then slightly. How has the map developed since the previous map and since the start of the year, Lucas?
Yeah, I think there's been a few key developments. Probably the most important one to call out is that we've had a bit of a shift. So previously, we've been including drones both in our space index and in our ecosystem maps. The reasoning for that is that drones have long been a complementary imaging platform for satellite imagery. And there are a lot of downstream companies that have been using both data streams in their offerings. We've got to the point now, though, that there are just so many pure play space tech companies that we just didn't have enough space to fit this in our map. So we've redone the map. We've excluded those companies, and we've also done the same for the space index. We've had a little bit of a rethink about the space, about the build segment. So we've reorganized it into hardware and software just to help in clarity. We can do this today because there are an increasing number, albeit generally relatively early stage, number of companies that are providing software, both for use in space and for operating constellations, but also for companies that are sort of providing software to aid in the manufacturing processes for space systems and subcomponents. I think the last change really to call out is that we've decided to verticalize data platforms. So this provides some examples of the kind of end use cases that space can tackle. And we've done it by logistics, by climate, by insurance and mapping as some of the key challenges that space can tackle with our observation data.
Thanks, Lucas. And if anyone's got any questions from the audience as we're going on, please feel free to post them in the chat. I'll focus a little bit more on one of the segments into the space tug segment. What does that mean, Lucas, for the increase of amount of satellites that will be in orbit?
Yeah, so space tug, we've been invested in the Orbit, a space tug company for quite some time. And in fact, we've consolidated the launch segment to simplify it so that it's just launch and space tugs. I think we're seeing a bit of activity here, a few new players out of the US. I think now that we're seeing that the launch problem is not solved, but is heading in that direction with a lot of very mature players and a lot of new capacity, hopefully, to come online in light of Starship. We're seeing these space tug companies that are able to provide that sort of last mile delivery service, so that when you're on a large ride share and you're only a relatively small payload, you can actually still get to the final orbital slot that you need for your constellation. And if you need to sort of aggregate a number of your satellites and sort of disperse your constellation appropriately, those space tugs can do that even when you're taking a much larger launch vehicle, which in theory helps with costs, so you can benefit from large vehicle economics, but still get to your correct orbital slots.
Thank you. Someone's asked what's the minimum funding. I think the minimum funding round that you used to included in the map.
Yeah, I can take that very quickly.
Yeah.
It's a bit of a shifting target, so depends what segment you're looking at. In the software segment, most of those companies are relatively early stage, and I don't think any of them have raised much more than $10 million in venture financing. On the other hand, if you look at one of the more mature segments, like the launchers or satellite constellations, there's very few companies that have raised any less than 10 million. So really, it just depends on the particular segment. Varies quite wildly.
Great, thank you for taking that one. What is the most exciting segment for both of you personally? Who wants to take that first?
I can go first, maybe. I think one of the areas personally that I find quite interesting is, again, maybe one of the less spacey segments as people might see. But I think on the downstream, we've seen a huge increase in the number of companies that are analyzing space-derived data and turning that into useful products that people can actually use, for a variety of applications. And that stretches across logistics, climate, insurance, and especially as we're seeing more recently, the severity and the frequency of sort of extreme climate-related events, natural disasters, it's increasing so much. And I think incumbents that are looking at these sorts of risks are potentially not well equipped to deal with the rapidly changing risks and the data that they need to deal with. And I think that's where space can really help. So for me, it would be on the downstream side, those data platforms, I think is most interesting.
Yeah, from my side, I'm pretty keen on the in-space economy. It's still quite an early segment, but I think in our initial phase, we've been quite interested in companies providing sort of the fundamental hardware layer. We invested in Voyager Space, which is ultimately going to be a space station that can provides the hosting platform for R&D, experiments, and space manufacturing, and to host humans on orbit. I think next, an area that we're looking at quite keenly is actually in-space manufacturing itself and R&D and companies that are providing technologies to enable that. But the in-space economy is a very large opportunity that there are lots of different takes and business models. So we're actively keeping an eye on developments in that segment.
Fascinating stuff. Thank you both. What segment is seeing the most investment now, and is that likely to change in terms of deals and round sizes over the near and then the distant future?
Sure. I think in terms of where the investment is going currently, actually, we track this through another piece of research that we just published last week, which is our quarterly space index. So if you were on the webinar for that, you might know some of this already. And usually, historically, what we've seen is most of the investment tends to go to the more capital-intensive companies. So these usually are operating on the upstream side of the map. So launch companies, satellite constellations, the build segment, which is hardware and components that go into space systems. So historically, these have been the segments that have attracted most of the funding. I think recently we've seen a little bit of a shift where some of the other segments, such as the in-space economy, which we sort of classify as beyond Earth companies, these have seen a large increase in the number of funding that they're receiving. And this is in terms of the number of deals we're seeing and also the size of those deals. One of the trends that we discussed to do with the Space Index last week was actually last year in particular, a lot of space companies, whether upstream or downstream, were tending to put off funding actually because of the broader macroeconomic environment last year. And what we're seeing now and what we might expect to see going through 2023 and 24 is a resurgence in the number of deals and the size of deals that space companies are raising. So it's something we're keeping an eye on, and it's something that we'll track through the Space Index going forwards.
Great, thank you. So everyone will be releasing those quarterly, so everyone can keep their eye out for the next Space Index. Space tech is obviously global. How many different geographies are represented in the index, and where are you seeing the most growth?
Yeah, so in this most recent ecosystem map, there were 28 different geographies represented. I think approximately half of the companies listed on here are from the US, which I guess is unsurprising, as companies there have probably the most readily available access to venture financing. But there's a lot of activity from the EU, from Europe, and Asia as well, particularly around Japan and Singapore. So yeah, space tech remains quite global, unsurprisingly focused on the US, but we're seeing pretty good even representation around the world.
Great, thank you, Lucas. I think we'll take a question from the audience, from Luca. Access to space is actually the bottleneck of the European space economy. Can launch startups really mitigate this problem? Tricia, do you want to take that one from Luca?
Sure. I think that's a great question and very topical as well. Again, it's something we've been discussing through our Space Index research, because what we saw in the last quarter, and at least in the last year or so, there have been a lot of launch companies raising funding, and a lot of those have been in Europe. And actually, in the first quarter of 2023, the largest space tech funding round that we tracked was ISAR Aerospace, which is a German launch company, and they raised 165 million, which, if you look in recent quarters, it is a huge amount of money that this business raised. And I think I agree, there are some conversations that you hear that actually maybe we need a European launch provider, something to rival SpaceX in Europe. And I think that trend is being seen with the amount of launch companies that are being funded, and also just European companies in general. Actually, the top out of the top 10 funding rounds we saw in the past quarter, 5 of those or 6 of those came from European companies. So I think there is now a shifting focus into Europe, and I think that's really exciting, especially on the upstream side, because historically those companies maybe haven't been so competitively ranked within kind of funding rounds that we track.
Great, thank you, Tricia. What emerging technologies, trends, and sectors are not yet represented on the map, and that is likely to become an integral section in the future?
I think there are a few things that we've been talking about on this topic recently. there are quite a few trends that we're seeing across different segments of the space industry that we don't necessarily track yet, but we think might be big markets in the years to come. So one of those is actually financial products to do with the space industry. So I think everyone's aware of sort of Web3 and this huge new market that's appearing. And we've seen a lot of space companies actually riding on that and integrating things like blockchain, things like smart contracts into the space industry. And I think while that's very early, I think it's an interesting trend that we hope to keep a track on in the next few years, because I think it's potentially an underserved market on the finance side. And that's maybe something that people don't immediately think about when they think of space trends. I think one of the other areas that we've been hearing a lot of conversations on is space-based solar power. Bit of a tongue twister, but I think solar power from space has been almost thought of as sci-fi for many years. And there are so many companies now working on making this into a reality. And I think technical advances in the last few decades are potentially making it more possible. So who knows, in the next few years, we might have a segment for space solar power. So something to keep an eye on.
Amazing. Watch this space. Thank you, Trisha. How does the distribution of companies across categories reflect the current priorities and the needs of the space sector at this time? Lucas?
Yeah, we try and give an even representation kind of across the value chain. I think the segments that you can see as most mature are kind of launch and the constellation segment, which both raised very meaningfully sort of through 2020 and 2021. And sort of building that initial infrastructure layer and providing that access to space. I think today we're seeing the downstream segment mature quite rapidly. So the analyzed segment and the product as well. Because given now that you've got all of this access to new data from these new constellations that are taking images in new modalities and at new resolutions and at previously unseen revisit rates. Now there's, I guess, a focus on how to actually use this data and make it useful to people here back on Earth.
Thank you. We'll take another question from the audience. Lars has answered a question I think that a lot of people want to know the answer to. Is there a market for reusing old satellites that are still in orbit, and are there any companies working on this at the moment?
Yeah. I can give a quick word. Oh, sorry, Trisha. Do you want to go?
No, go ahead, Lucas.
Yeah, so it's not something that's really been done, I think, meaningfully to date. I think in this kind of segment, the most progressive thing that's been done today is life extension. So I think Northrop's done some life extension work on Intelsat satellites before. As for actually recycling and utilizing satellites that are already in orbit, there is an accelerator a company that came through our accelerator program called Cisluna, and they're looking at ways to process materials that are on orbit so that they can be reused. So there are startups working on this issue. They are relatively early stage, but I think they're generally well engaged with NASA and the ISS and other partners to start trying to develop that capability. Because in the long term, I think that's something that probably will become increasingly important.
Yeah, and we have one of our portfolio companies, Astroscale, who are not doing that, but they're helping remove debris, aren't they, Trisha? Do you maybe want to explain a little bit about that to everyone?
Yeah, exactly. I think there are multiple ways, I think, to solve the issue of having a lot of old, potentially defunct satellites in space. So as Leah mentioned, Astroscale, they're looking at how to actively remove debris from orbit. And I think that's one of the key areas of kind of space sustainability that we talk about. Lucas mentioned, one of our old accelerator companies, Cisluna Industries, they're looking at recycling materials. And I think another area that we've looked at is in-space refueling as well. So there might be old satellites that can continue functioning for many years to come, but they've just run out of fuel. And we've seen a lot of startups that are looking at that as well. So I think there are multiple ways that startups are trying to solve the issue.
Brilliant, thank you. I think you touched on it briefly earlier, Trisha, but where can space tech have the greatest impact in the fight against climate change? This is a huge and very broad question that a lot of people are interested in.
Yeah, definitely. And I think for us, it's really important that people understand that actually space has a huge role to play in climate change. The two things aren't necessarily mutually exclusive. And I think one of the most exciting things is that because of the cheaper access to space, there's been a huge increase in the number of novel data sets that we can get from space. So we can much more easily monitor the Earth, monitor our climate, and figure out where things are going wrong and what measures we can take to improve it. So one of the areas, for example, that we've spoken about before is carbon. So carbon credits is a huge new market that a lot of startups are operating in. And space data provides that vantage point where you can much more easily assess or measure carbon removal projects and see how well they're doing at protecting our climate. One of the other areas I spoke about earlier was on natural disasters and insurance. So every year there's hundreds of millions of dollars in losses caused by extreme climate change events. And this has impacts on businesses, on individuals, on homeowners. And if you can access those novel data sets that only really can come from space, and you can improve the way that you forecast those disasters, you can much better prepare and mitigate the potential negative effects of that. And I think those are some of the areas, at least we're looking at from a climate change perspective, which I think are really exciting.
Really exciting, definitely. Thank you, Tricia. In-space economy companies recorded their largest numbers. Which areas are investors now prioritizing as we look to build out space offerings above
Earth? Which areas are investors prioritizing?
Yes, correct.
Well, I think it's an area that has rapidly matured over the last few years, and there are an increasing number of investors now considering not just the in-space economy, but space more broadly. I think the in-space economy it requires investors that are typically a little bit more tolerant of longer timescales. Probably typically deep tech investors, companies that are happy with a fair level of technical risk that needs to be retired before these companies are able to provide a commercial offering. So I think to date, a lot of the activity that we've seen, or sort of a fair amount of the investment, has been from funds that have relatively long investment time horizons. So I think angels and family offices were a lot of the early players that were investing in the in-space economy. But I mean, today I think more and more people are getting involved. I think for some of the space stations, you have biotech companies and investors that are investing because of the promise of in-space manufacturing on space pharma. So I think the investor base is becoming more broad and reaching sort of more typical generalist investors.
The whole point of the exercise, really, to you do the work and then everyone can find these amazing companies. Are there any companies that are operating in multiple categories? I think we've had some questions about that in the past. And if so, which ones, and how can they bridge those categories?
Yeah, I think there are actually quite a lot of examples. I mean, a lot of space tech companies are operating in a lot of different segments of the value chain. Companies that operate satellite constellations may well be manufacturing their own satellites as well as operating their constellation. I think we have an internal rule that we can only represent each company in one segment, which does make things a little bit tricky at times. So we really just have to decide what we see is how the company really portrays what their key offering is. Let's see, trying to think of some examples. So for example, ICEYE is building their own satellites, but we wouldn't put them in satellite manufacturing because really their main offering is the sale of SAR data. So we put them as a constellation operator.
Perfect. That makes sense. Thank you. How many of the companies represented are part of Seraphim Ecosystem, so part of the SSIT portfolio and part of the Accelerator alumni?
Sure. So in the map as a whole, I think we have almost 200 or 300 companies represented or that we've looked at. Seraphim, through the portfolio and through our accelerator, we've supported over 100 companies in the last few years, which is a really exciting milestone that we hit this year. Of those 100 companies, around half of those are represented somewhere on the map. And again, just coming back to the reasons, or the criteria for making it onto the map, it's companies that are raising money and that have raised in the last couple of years and that we know are actively operating in the space segment. And that's how we've gotten to those 50 companies or so that are represented in the map. But as I said, overall, there's more than 100 companies that we've supported, and we're really excited for that number to grow.
Great, thank you. What an exciting milestone. I think that's the end. That's all from me. I think we've had quite a few questions coming in. I'll start from the top. Trisha, there's one in from an anonymous user. Do you agree that space debris risk mitigation and SATS traffic management are key to space insurance? And how can you solve and deal with it?
Sure. I think obviously we've talked about insurance on the downstream side, but actually there's a huge market for in-space insurance as well. And a lot of the incumbent insurers, kind of the big insurance names that we hear about, are looking at insuring satellites and satellite missions. And I think that's obviously really important because it's not just about getting to space. Launch insurance has been, a thing for many years. But now it's about how do you safely operate in space? And as the risk from space debris is increasing, satellite operators and spacecraft operators are getting much more cognizant of those risks as well. And so one of the ways, or one of the things we need before that can be as robust as we need it to be, is data about what objects are actually in space, where are they moving, and who, or which spacecraft can they potentially collide with. And this is really important information, and it's solved by having capabilities that can track debris, that can track objects in space. So whether that's done from the ground, like one of our portfolio companies, Leo Labs, or even from space, another one of our portfolio companies, Privateer, are looking at addressing that. So the more data we have on the in-space environment, on the low Earth orbit environment, the better. And that's really, I think, the first step in dealing with insurance in space.
Thank you. We'll take a question from Richard. Lucas, if you want to pick this one up. There appear to be dozens of small venture funds playing in a Series A or earlier investments arena. Are you seeing trends towards larger and or later stage venture funds? Any examples?
Yeah, so I think most of the sort of space tech dedicated venture funds typically play at slightly earlier stages. We're relatively unique in that we're more dedicated into sort of Series A, Series B plus out of our fund. I think in general, what we've seen recently over the last couple of quarters was a little bit of a pullback away from growth stage investments, particularly around space, because a lot of space companies do have quite high burn rates. And given the economic uncertainty, I think investors were quite cautious, and startups, given that they couldn't really get too favorable terms during that period, sort of pushed out needing to fundraise. Coming into Q1, we've actually seen quite a drastic return to growth deals. In terms of the number of growth deals, it's the highest it's ever been. I think we saw around 30 space tech growth deals, which being Series B plus. So I think people are either out of necessity or because the funding environment, or the economic uncertainty is clearing. We're seeing a return to growth rounds, the sort of early stage activity has sort of continued to go on throughout, really.
Thank you, Lucas. We're going to take maybe one or two more questions because we're running out of time. There's a question from Luca. As a VC investor, do you see early stage space startups as potential investments of 50x, 100x multiples in the next 10 years? Or is the space economy still too immature?
I think on that question, I think regardless of whether you're looking at the space ecosystem, the space industry or any other industry, VC investors are always looking for those large returns. So it doesn't matter what industry you're operating in. We're always interested in companies that are going to scale to millions and billions of dollars in value. So for us as investors, specifically in the space economy, we really do have to believe that space has the potential to grow to that sort of size. And so in any of the deals we make, whether they're seed stage, or maybe early growth stage deals, we always try and sense check whether we think that this is something that we can achieve. And, you know, maybe 100 is a bit of a stretch and 50 is more reasonable. But again, you know, we wouldn't be investing in companies if we didn't think that they had the potential to grow to those sort of scales in the next few years. So for us, it's definitely an indicator that we think that the space tech economy has the potential to be as large as we hope it will be.
Great, thank you, Trisha. I think someone's commented that they say they want to know about drones and they want to know about the drone ecosystem. So I don't know if you're still collecting that data or they can find that potentially elsewhere. I don't know, but I'm sure you can answer them perhaps in LinkedIn after the session today, because we have to go now. But thanks to everyone for their questions. If anyone wants to find out any more, as I just said, please continue to post afterwards. It will be recorded and shown on our page. Also, you can find our index, as we mentioned, and our ecosystem map all on our website under research. But thank you for everyone who tuned in today, and thanks to Trisha and Lucas.
Thanks, everyone.
Thanks.
Thank you. Bye-bye.